Hello nieces, hello nephews, it's your Uncle Charles here, and today the S&P 500 decided to do a little bit of chopping, tricking out some bulls, tricking out some bears like it usually does before it give us its real move. Alright, we're going to talk about that, but first check out this flow sentiment. As always, I have it filtered for 500k premiums or above, expiration date within 1 month, and the big money overall is bearish in the short term. That's where they're putting their money to, more into puts. Okay, 81% in the puts compared to 19%. All right, 26,000 compared to 6,000. All right, so as always, I got a Discord where I give my analysis in real time, and I also share my trades with my group in my Discord. Okay, to try to keep us all on the right side of the trade based on the price action. Okay, I took about 3 trades today. I was 2 out of 3. Let me talk about the one I lost first. I took a trade on QQQ, and here's where I saw the setup. Okay, so QQQ made this very strong move. This is a 15-minute chart. It made this very strong move from the upside. I had some resistance around 304.82 based on a daily chart, and it was just breaking down my support levels. Okay, the reason why I missed all this because I was trading the SPY, but I actually took a put when I saw it closed below the 298 support level right here, and the very next candle it went back up. I had a stop loss around 298.5, hit my stop loss. I was out quick. Okay, lost that trade. I was in the red, but it was a small red. Now, as far as my winning trades go, keep in mind these were all called out in real time in the Uncle's Trade trading room in my Discord. I had a resistance around 4.6 to 4.5 zone. That's the 2 yellow lines. Enter the put right there. And I was lucky enough as it hit each of my support zones. I had a support zone around 4.2, 4.3. Scaled out. Hit my next support around 400. Scaled out. And I think I wrote it down to around 398, 399-ish. Before I just sold the rest of my puts. So I was able to catch a decent sized move. That's about, a $6 to $8 move. Alright. Very happy. I didn't catch the full move. It dropped as low as 394.82. Okay, so it was about $11 to $12 move. But of that $11, $12 move, I was able to catch about $6 or $7, $8 of it. So I was extremely happy. Okay, that was my first trade of the day. That's when I tried the put. Later in the day, I tried the put with the QQQ. Didn't work out for me. Had a cut loss very quick. All right, very important to cut loss. Keep our losses small. All right, if you find yourself praying or hoping, based on my experience at least, that never works. So just cut your loss. Anyways, and then towards the end of the day, kept seeing this rejection. SPY eventually was basing in the middle of the day, broke out, went all the way up to my 4.3 resistance level. Based around there, looked like it wanted to break out, but strong rejection from that 4.2 to 4.3 zone. Okay, but I waited for the loss of 400 so I can catch that second leg down to my next support level around 398, and I ended the day there. Okay, so 2 out of 3, pretty profitable day for Uncle Charles. Very happy. Hope my members are able to make money. But here's a daily chart of SPY right here. Just want to remind you guys about this green trend line that I have, multi-year green trend line. That started way back in January of 2018, connects to the high of February 2020. Also touched from the high of September 2020 and almost October 2020. Broke out of it back in November of 2020, okay? Before we went on this crazy bull rally. Now today, very interesting day today because we've revisited that green trend line. All right? So the bounce that we got, in my opinion, was no coincidence. It was a very critical support level that I told you guys about yesterday. Okay? Ever since we broke out of this triangle pattern, I've been telling you guys to stay bearish. Yesterday, I mentioned to you guys that we got a false breakdown of this blue trend line right here that started back in January high, connects to the February high, had a breakout mid-March, but we had a false breakdown of it, of it yesterday. So that adds to our bearish sentiment. And I said to you guys yesterday, based on the resistance of this blue trend line, do not try to look for calls unless we clear a resistance level, which was the critical 4.6 level. All right. You can also look for longs or call based off the critical support levels. That's always the plan, right? Which I told you guys about was this green multi-year trend line around the 395 to 396 zone. Okay, you always try to buy calls or longs based on support or watch for bounces there. Okay, but you also want to look for puts or shorts from a critical resistance level, which is what I did based on this blue trend line. So as far as this false breakout based on this blue trend line goes, today was that follow through. Okay, right now we're chopping, all right, between that 406 zone, which is also happened to be a very critical support level twice last week and the week before. Yeah, I think it was last week, May 2nd and May 6th. Okay, all right, and now we still got this green trend line, critical support level. So if we lose that level, which is for tomorrow, be 395.9. If we lose that level, we could drop down to 386. I showed you guys 386 yesterday. It was a previous demand zone. Yeah, based on the January 25th, 2021 high. Okay, it was a previous resistance zone, excuse me. And it also served as a support zone around March 25th, 2021. So, yeah, 386-ish, around there. Okay, 385, 386 zone. And then below that is 380, okay? Because I got my fib level from the March 2020 low to the January 2022 high. And my fib level is the 38.2 retracement level is at 380.3. So if 386 fails, I think we could get a bounce around 380.3. And if that fails, then holy moly. Hold on to your horses if you have any horses. But as of right now, 395.9 will be the very critical level based on my green multi-year trend line over here, okay? Let me change this color so you guys don't get confused, okay? So for me to be bullish, it needs to get back above this blue trend line right there, okay? Which is currently, for tomorrow, will be around 404.86, okay? Keep in mind this trend line just slopes down, okay? 404.86. But I'll still be using 405 to 406 zone as a support level because, as a resistant, okay? It was a critical support level last week, serving as a very strong resistant level this week. So don't get bullish until 406 is clear. And if 406 is clear, we should get a squeeze up to 410, 412, 415. All right, above 415 is pretty, short-term bullish-wise. You know, we could get a squeeze up even higher. But as of right now, I believe if we can clear 406, we should get a squeeze up to 415. All right. And then the big drop would be a loss of 395.9 down to 386 and 380. Okay, so pretty much between 406 and 396, between that $10 range right there, is the chop zone. Okay, you can still trade within that chop zone. Uncle Charters do have some levels within that chop zone: 398, 400, 402 to 403 zone. Okay, gotta play it level to level, in my opinion, if you're gonna trade the chop. But trade the breakout or the breakdown should give us a decent leg, higher or lower. Okay, should give us a nice decent move. Okay, possibly for the downside, possibly $8 to $10 move. And if we can clear 406, an $8 to $10 move to the upside. That's just my opinion. That's what I think. We've been getting some very strong volatile moves lately. So I'm going to play this unbiasedly. I don't care if I catch the $10 move to the upside or the $10 move to the downside. And of that $10 move, if I can catch $2 to $6 of it, because trading's not perfect in real time, I'll be very happy. Just saying. Okay, so that's my analysis for SPY right now. VIX, inside day candle for VIX right here. This is the mother candle. And this is the child candle. It just means it's within the range of the previous day candle. So I like to see a breakout. The high of this candle is 35.48. If VIX can break above that level, very bullish. Puts 37.5 and 39 in play. And then the low of the mother candle is around 31.9. So if VIX breaks below that, that's very bearish. Put 30.2, then 28, and 25.75 in play. Okay, just let the price action guide you. All right, this is my losing trade. We already talked about that. All right, shame on you, QQQ. Don't help Uncle Charters make money. Anyways, so I had a critical support level around here, around 301. QQQ closed a little bit below that. Another critical support level at 298. I did mention don't get bullish unless that level can clear. It did kind of clear. So maybe if you scalped it or day trade, be good Okay, I don't really do swing trading, at least not in this market. But as far as tomorrow goes, Triple Q needs to get above 301 to put 304 to 305 zone in play, and above that would be 307.5, then 311.4. Okay, below 301 keeps 298 in play, and if 298 fails, that's a big critical level that's lost there, and should put 292 in play. Okay, so right now we lost 292 and we recaptured it today. That's technically a false breakdown mode. So Triple Q needs to continue to hold 298. Best time to turn bearish, loss of 298. Dow Jones still closed below that 322.7 level. So to be bullish, it needs to get back above 322.7 and clear 325.5 and actually close above that, putting 329.6 and 335 back in play. Below 322.7, I'm bearish. I still got a price target of 315.2 in play, okay? IWM closed below my 175.7 level, so it needs to recapture that level to put 178.5, 180, then 182 in play. As long as below 175.7, 172.8 is price target, then 168.7, okay? So yeah, another false breakdown. Not a very strong false breakdown, but technically it is. I say it's not that strong because it's a red hammer candle instead of a green hammer candle, but trying to be unbiased here. We lost that 796 to 797 zone yesterday. Tesla technically recaptured it, closing around 800 today. So that zone needs to hold to keep more upside in play. My first price target will be around 850 to 855-ish. Then 872, very critical level there. I'd be bullish if that clears, putting 925 in play. Okay, if we lose 796, I'll be bearish. My next price target below that is 766s. Then around 717, then 700 below that. And for Apple, Apple's looking bearish. Okay, we lost this 156.5 level back on May 6th. Today, that level was back tested as of resistant. Okay, that's bearish price action. As long as below 156.5, I'm bearish on Apple. Okay, the next support is 154.5-ish, which is, I think, in aftermarket, Apple's below that. 152.5, 150, then my ultimate price target 147.7-ish. Okay, as long as below 156.5. Above that, I would be bullish. Put 161.5, then 165 back in play. Alright guys, so that's what I have for you guys today. I hope you guys had a great trading day today. Hope you guys are, finding value in my video. I really try my best to give you guys the best content I can give you that I believe can actually help you guys, trade this market and be profitable, okay? At least from a day trader's perspective. Alright guys, so thank you guys so much for watching. Have a good day.